Happy New Year. Happy New Year's to all of our partners and welcome to 2025. This is going to be our first session of the year. I hope that you were able to enjoy the New Year's theme music just as much as I have. I am really excited about what we're going to be doing in 2025 for the most part. And I wanted to bring along a very special guest of mine. In 2024, I basically wanted to be in a position where I was doing an enormous amount of networking. I had visited many different BNI chapters, went here, went there, went everywhere. And what I was able to find is I was able to meet a number of distinct business owners, just really people who at the same time were smarter than I am, right? It's great to be in a room of people who are giants in so many ways. And as we had mentioned a couple of weeks back, we were going to be inviting other small business owners into our forum so that they can bring some of the insights that they have, right, to you, our partners. So we're broadcasting live right now across Facebook, LinkedIn, and YouTube. And I just want to invite my guests to the forum today. Today we have Mr. John Dahlberg with Growth Sigma. I want to welcome John to our broadcast today. John, how are you doing today?
I'm doing very well, Lee, and thank you for having me today.
It's great for you to be here. We've had so many different conversations. There's so many elements to who John is and the many things that he's doing. We first started the conversation about some of the things that he had done on the networking side of of the world, inside of the tech space, and the promotions that he has gotten in order to get to the position where he is today. So John, if you could, why don't you share your journey with our audience as to how you got to where you are today with Growth Sigma?
Okay. Well, it's been a number of pivots that I've made over my career that have really led me to where I am. I think Lee, you and I chatted a while back around my career in doing like large scale networks with data, and that really was very formative in terms of a lot of my thinking processes that I do. And once we had some challenges with the economy back in 2000, 2001, I decided to pivot my career and really focus more on business strategy and workforce management solutions, and spent many
Mhm.
years doing that. One of the things that I was doing without realizing it at the time was I was thinking about these large enterprise clients as networks of people and resources. And what I did was I helped figure out how to put best practices in place, and spent the better part of 15 years going out to large companies like Microsoft and State Street and a lot of other big brands that you probably recognize, and helping them with come up with workforce management strategies. So that was a big pivot in my career, and over time, as we were building that company up, we developed into a market leadership role, and I had to take on more and more management responsibilities and learn how to train people, and so a lot of the approaches that I used, I had to figure out how to codify and get into systems. So I'm very much a systems thinker type person. And then about 9 years ago, I moved into a company that focuses on direct sourcing, which is really helping companies interact with small businesses and independent consultants to augment their workforce, and did that for a number of years. And transitioned into more of working on the business type activities like mergers and acquisitions and corporate strategy and development work. And so that was another big pivot. I spent a lot of my career working, client facing, setting up these big programs. And then once I reached a certain level in my career, it really became how do we scale the business up,
Mhm.
and put the right structures and strategies in place to really help the overall go to market teams be successful. And then One of the things that we did at that company was transform our go-to-market teams, and we restructured it, and we took a very methodical approach to re-engineering our sales, marketing, and customer success organization. And because that was so successful, that really became the genesis of Growth Sigma. And so we took
Hmm.
the plays that we did there, codified them, developed a playbook, a blueprint around how to be successful in some key areas around your go-to-market strategy, and that was the genesis of Growth Sigma. And so, as I was thinking about an inflection point in my career over the last year, that was an area that I decided to start really leaning in on the Growth Sigma strategy and going full time into the consulting business. So we have a blueprint that we've developed that really focuses on four key areas of your growth strategy. The first one is around prioritization, because the key to strategy is around really being very selective around where you want to put your investments. And we can talk
Hmm.
about different investment strategies that I know we've had some good conversations around previously.
Hmm.
Second is around value positioning. So how do you take your product and service to market and articulate value to how you're going to help your customer. Personally, I'm in the helping business, but I think any good business would say the same thing. And so you have to be able to articulate both the qualitative and quantitative ways in which you're going to have an impact on delivering a value add. And then the third area is around process engineering to make sure that you're aligning to your buyer journey. And then the fourth area is around performance management so that you can continue to improve and grow the business over time. So that's kind of the blueprint that we put together. Um,
Hmm.
and that's the area of focus that I'm doing my consulting work with right now.
No, one of the things that I heard, and you often hear about this, is that there are going to be in a person's career span several different pivots. So I
Yes.
heard of a couple of different pivots in there, and usually those pivots leads to other opportunities for growth. One of the most interesting things that I found about your conversation is the name of your organization,
Yes.
Growth Sigma. And I believe that there's a story behind that name. Can you help our audience to understand what is the story behind that name?
Yeah, absolutely. So sigma is actually the Greek symbol that represents the standard deviation curve, or the standard deviation. So there's a mathematical reference to it, and the way that you typically would use standard deviation in business context is you want to get to high probability outcomes. And so what we focus on in Growth Sigma is bringing together the growth strategy with predictability, and that's really the genesis for the name of the company. And I'll give you an example of how we drive predictability. So in the first area that I was talking about around the strategy and the prioritization, the ability to focus your attention on high propensity buyers ups the probability that you're going to be able to win business. So a lot of sales organizations will take a very scattered approach. What we bring to the table is helping companies focus in on the unit economics of successful clients, and then narrowing into customer profiles that match that, so you can align your investments into your go-to-market strategies against high propensity buyers. And just by doing that, you can have a significant increase in your pipeline value, a significant decrease in your deal life cycles, and generally speaking, your deal size is going to be going up because you got buyers that are much more likely to buy your services or product.
Sounds like a little bit of marketing is in there, right? So with the marketing, you're looking at that avatar and narrowing down that avatar so that the communications that are going forward are speaking to that customer. Right? Because a lot of in most instance with client acquisition, that's where you spend a significant amount of resources,
That's right.
right? So if you can zero in on that correct avatar, get your copy, your communications down, right? You're going to be able to focus on that unique customer and then hold on to that customer longer. So it's a little bit more of doing a lot of work on the front end so that you can reap the benefits on the back end.
Yeah, yeah, and I look at it as the full life cycle. So marketing is absolutely a big part of it, and we can talk about how the role of marketing has shifted over the last several years. But the at the end of the day, what you really want to get is a customer that's ready to buy. You want to
Hmm.
get a customer that is going to yeah, so marketing plays a key role in sort of teeing that up. But then you also have the sales focus, which is who you're going to spend your time talking to and meeting with, and doing demos and that kind of thing. And then ultimately, once they land as a client, what's the lifetime value that that client's going to give you, right? You want clients that are going to be fruitful over time, and they're not going to be painful to manage. So it's really the full life cycle that we look at. And so I look at the front end piece around strategy as a data exercise, because there's a finite universe of potential buyers out there. And if you can
Hmm.
actually narrow in on the specifics of who they are, then that really helps marketing with being able to target the personas within those organizations to go
Hmm.
after. And then you have a lot of power, because then you can deploy things like account-based marketing strategies and networking strategies to go find the specific people that you want to get in front of your sales team. So it's you don't want to just scatterbomb the market, because that's expensive, and a lot of the
Yeah.
old marketing strategies are not that effective today. If you can narrow in on specific accounts that you want to go after, and then the specific people within those accounts that are in positions of authority that are going to make decisions, then you can actually find out who are the connections that you have that can align. So that kind of third with 6 degrees of separation concept that you find in networking,
Hmm.
the actual buyers that are in a position to make a decision aren't that far away. And if you can figure out the pathway to get a conversation going in a warm introduction kind of environment, that's going to be much more successful than blasting out LinkedIn emails and stuff like that.
Been there,
Yeah.
done that. And as the small business owner, that small business owner probably started their business because they had a certain passion about whatever it is that they're doing, or they saw that they had a high value skill and they wanted to be able to focus on sharing those things with others. They didn't typically sign up for all of the hats that they are now wearing as a small business owner. So that piece of insight helps them just a lot. When you were giving me that feedback, the one question that came into my mind was, a lot of small businesses don't spend a significant amount of time on branding, right?
Yeah.
When you see their brand over in different mediums or channels, it's a little bit different, which drives a little bit off. People don't understand who they are and what it is that they're doing, right? So there's one component to that question is, should how much time should the business owner spend on branding, and should their branding be locked in before they start their marketing campaigns? Or can they both be done simultaneously, right? Inching forward at the same time and together.
I kind of feel like they need to be developed simultaneously and ongoingly. Like your brand ultimately comes down to the experience you give your client, and that
Mhm.
experience is going to be very different depending on the product or service that you have. And Yeah, so I think you're never really done with any of that. You got to keep pushing it forward and creating delightful experiences, and taking that feedback and improving where you need to improve your brand experience. So we
Yeah.
talk in first segment, we talk a lot about the customer experience, and to me, customer experience and brand are inseparable. They go in lockstep together.
Absolutely. Absolutely. Customer experience and brand, and I used to call it the yellow brick road,
Yep.
right? Follow me down the yellow brick road, and that's where you actually go and end up. John, if we were to pivot just a little bit, you were telling me some of the things that Growth Sigma is known for. One of the things that you mentioned was what to focus on. And in particular, when I hear that, I also say we need to focus on what we need to focus on, but we also need to know what not to focus on. And sometimes what happens is that purple squirrel will run across the room.
Yes.
Right, and, since you haven't seen a purple squirrel in life, it all of a something becomes this thing that you wanna chase just a little bit more,
Yep.
right? So,
Yep.
as you are focusing on with your customer on where to go, right, could you also give them some insights so that they can build up the habit of not chasing the purple squirrel as well?
Yeah, that's actually probably the more difficult challenge. And and I think what I found is good leaders are can develop that skill set over time. My experience is that many times entrepreneurs they fall into the trap of trying to serve the whole market without really focusing on where they have a right to win, and
Mhm.
so that creates a lot of different churn and distraction for
Mm.
the organization, and and being able to say no is probably more important than being able to say yes. Um, so yes, I totally aligned with what you're getting at there, and and quite frankly, sometimes that's a tough conversation to have with the founder,
Mm.
but it's a necessary one because they can really distract a lot of success if they aren't careful. And I've certainly seen that play out many times by different people. But yes, you have to learn to say no, and that's the most important part of actually being able to execute against your strategy. I also call it the shiny object syndrome, which happens in a lot of different
Ah.
areas. One of the areas that we get into is around when we do the process work. One of the things that we do is the technology alignment because process execution really comes down to repeatable procedures, the people that are going to do it, and then the tools that are enabling it. And one of the things that we see in particularly the sales leadership is the average tenure of a chief revenue officer these days is something like 18, 19 months.
Mhm.
And so that leads to leadership churn over time. And so if you think about a new leader coming in every 18 months or so, the first thing that they're going to try to do is demonstrate that they can execute change, right? Because that's why they're there.
Mhm.
And so they're going to bring in what they know and heavily discount what's already there. And you get through 2 or 3 cycles of that, and then you end up with all this technology that's floating around in the company,
Mm.
much of which it gets unused or is not providing the type of value that you're paying license fees for. And so
Mhm.
it creates this technology sprawl, and that's in large part because there's so much shiny object activity within the go-to-market toolkits that it just ends up being a lot of bloat. And so one of the areas that we focus on with the process area is in addition to creating consistency and best practices, we're also looking at cost takeout. There's a huge opportunity for that for companies to remove some of the overhead with the technology stack with go-to-market tools.
So one of the things that I heard is that as you start out, you have your TAM, which is your total addressable market. That needs to be narrowed down into your SAM, which is your serviceable addressable market.
Yep.
From that SAM is where you build out that avatar, where you're going to basically communicate with that particular customer. Everything that goes on communicates with that customer. There might be that secondary effect where you're communicating with your primary avatar, but then that secondary effect pulls that profile, or I'm going to use the word that you use, persona in
Yep. Yep.
before pivoting to that, because the last part of what you had mentioned to me says that organizations on their very own, it just happens. They run into implementing technology that becomes debt at some later point in time.
That's right.
And then there needs to be a strategy to unwind that, right? Or if a platform is being used, right? How do you implement that new platform while you are also sunsetting that legacy application?
Right.
But before you go into that, I want you to hit that point. But the other part that you talked about is process engineering,
Yep.
right? And how it you really don't want to implement a technology solution if the process engineering hasn't been done, because all you're going to do is automate chaos just a little bit faster.
Yep.
So give me a little bit of insight when you're working with a growth sigma customer, how you approach those two particular pieces, the process engineering portion of it, as well as the technology, dealing with the technology debt as you formulate the strategy.
Yeah, yeah. So one of the common, so I'll give you kind of a detailed example. One of the common things that I find is, I'm going to pick on Salesforce for a second because I've been working with Salesforce for
Hey, go ahead.
well over 20 years. So
I
to
don't
bring,
own any stock, by the way.
yeah, I've made some money trading options on Salesforce, but that's another conversation. Uh, the so I started using Salesforce back in probably 2002, so it was very early days of the company, and I've been keeping that close to my vest for ever since. And one of the things that I find is that there's different sort of implementation approaches that companies will take, but I very rarely do I walk in and do an assessment of like a Salesforce implementation and say, "Oh, you guys got it right." Usually, what I find is that there's like 4 pages of data fields on the opportunity form, most of which doesn't get used, and so there's just a lot of like, because the technology is so easy to configure and deploy, a lot of the stuff you're talking about around the process engineering gets shortcut, right? And so you end up with not a whole lot of architectural structure to how the tool is being used, which creates a lot of problems. So things like information architecture are really important. I know you got a technology background, and
Mhm.
probably know what I'm talking about. So when you've got 4 pages of opportunity stuff that's not used by by most of the company, you haven't really thought through like how different information needs to be distributed and utilized. And so that's a big gap that I see. And then you end up with also a lot of plugins and integrated technology tools that are augmenting the CRM stack. Again, a lot of those don't get used effectively, and so you accumulate a lot of this technical debt. And sometimes it's just a matter of saying, you know what, we've got 50 licenses of this one augmented tool, and it could be, let's say, an account-based marketing tool, or as an example, but we're really not being effective in our account-based marketing strategy, and we're not seeing return on that. So why don't we dial that back, right? And so
Mhm.
there's potential cost savings there. Or it could be that you've got a mapping technology. I was talking with a friend of mine recently that was dealing with this particular situation with a mapping tool that just wasn't being used, right? And so there's either a training gap, or it's just not a good fit for where the company is at the time. But you end up with all this sort of fluff in the system, and being able to logically retire that while at the same time you're engineering the correct process, and then leaning in on the tech stack that actually does work aligned to the process definitions that you've got. That's the transition or transformation work that we will get involved in.
No, I've implemented solutions all around the world, and the one thing that we have always encountered with implementing the solution was technology debt,
Yep.
right? Legacy applications are always going to be there, right? I have been at, Fortune 100 companies where we had implemented a SAP solution that was running into the high double digit millions of dollars. And one of the things that I found is some of those organizations were still, this is not so long back, but some of them were still running on MS Windows or Windows XP, right? So you
Yep.
have this large SAP application, and tied to that SAP application, you have a Windows XP application that's printing all of the labels that are going on to boxes as they're being shipped out to the customer,
Yep.
and that becomes so critical. It's running on a single box. There's no high availability, right? If it
Yep.
goes down, the operation comes to a single crawl as well. understanding how you tie all of that, you then sunset the legacy application. This is probably not going to be something that a small business owner is going to be encountering, probably because of the push more into a SaaS model versus them having to purchase a piece of equipment, put it into a room, and
Yeah,
manage it there. But also, they lose a little bit of data sovereignty as well. So
yeah.
do you run into that with your customer as to, where is this data, and then how do they integrate it so that they can get a report where they can get the insight that they need in managing the performance of their business?
Yeah.
But as you explain that scenario, maybe you can just double tap into what it is that you do to set up that dashboard, and what are those KPIs that need to be measured, so that you can know how healthy the business is and how it's functioning.
Yeah, yeah. So let me go back one step because you mentioned something
Uh-huh.
I wanted to double click on, because I do think that the concept of technical debt is actually really important for small business owners. And
Okay.
as you're starting a business, and you're in the early growth phase, you have to make trade-off decisions, and that's true of any scale of a business. But when you're early, you don't have the dollars to invest in like enterprise grade software solutions. You have to make tactical decisions to meet short-term deliverables in order to meet
Mhm.
your customer commitments. And very often that means putting a tactical solution in place. And I'll give you an example. So I mentioned earlier I spent 14, 15 years in one of the operating companies within the Legis Group. So it was Legis Global Solutions. We started a new operating company, and I was on the ground floor of kind of figuring out, this is a market that we wanted to go into. And when we started, there wasn't a budget for things like integration software. And yet we were making promises to our customers that we would be delivering electronic data invoices, EDI files. And so we had to figure out how to do that, but we didn't have like an ETL solution or something at that time. So we were literally building these types of solutions in Excel templates, and getting the job done. And I was always warning the sales team, if we do this, it's going to be around for several years. um,
It's like a tax. It's like a tax.
yeah, and then eventually it's like, all right, we're managing billions of dollars here. We shouldn't be doing this anymore. So we invested in the right technology solution at that point. But those are decisions that you have to make over time. And the more that you can be aware early on that, what, we're making a trade-off decision here that's not going to be best in class, but is okay for where we are with the life cycle of the business, go ahead and make that decision. Just know that at some point you're going to have to pay the piper on that decision, and
Hmm.
change. So you're deferring an investment cost with that, which is going to be more expensive down the line. But if your growth strategy is correct, you justify the cost later on because you have the income to support it. Right. So I think that's actually a really important lesson for small businesses is go ahead and make the tactical decisions that make sense at the time, but be aware that many of the decisions are going to cost you later on.
Oh, absolutely. Don't put it into some dark crevice and want to just forget about it. You know
Yep.
that is there. Have a conversation about it. Put it into that overall strategy to make sure that you are aware that it is there, and it is a risk probably that you want to put on your risk register so that you know that it is there and you have to do something about it eventually.
Yep. 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 Now, to your question on KPIs,
Hmm.
I think there's multiple levels of KPIs that I get interested in. Um, yeah, you've got the typical business KPIs like EBITDA, revenue recognition,
Hold
and
on.
yeah, yeah. What's that?
I didn't for those in the audience. John had used ETL, which is extract, transform, and load. It's a data concept, right? But I let that pass because I was like, what if they don't know what ETL is?
Oh, yeah.
But give them an understanding of what EBITDA is as well, because I believe that EBITDA is something that all small business owners should be focusing on, because one day they want to sell.
Yep. Yep. Um, yeah, and actually, let's talk about that sell part of it because there's a formula that might be interesting for your audience as well. But the EBITDA stands for earnings before debt, taxes, amortization. I'm sorry, amortizations. Did I
Income
miss one?
earnings before income tax, depreciation, and
Depreciation
amortization
and
is how.
amortization. Yeah, yeah.
Yeah.
I skipped the depreciation part. Um, the long and the short of it is EBITDA is a measure of how much money you're actually making, right?
Mm.
And that's measured before you get into your depreciation schedule. So if you've got fixed assets that you're depreciating over time, it excludes those types of items. So it really is a measure for investors to look at how much cash flow is the business able to generate, which is a very, very important measure for valuation standpoint. So if you're into the stock market, for example, PE roughly is equivalent to the earnings, which is the PE, the price before earnings ratio, which a lot of
Mhm.
folks will be talking about on CNBC and other news outlets. Yeah.
No, because every small business, if the vision of the founders is big enough, wants to be that big business and eventually make it to the point where they're on CNBC, Squawk, and all of the others at the
Yep.
same time, right? Everybody wants to grow into that level of business.
Yep.
So, John, we are at the bottom of the hour,
Yep.
right? And we have touched on a lot of things, and hopefully, we've brought value to the audience. Is there something that is a major takeaway that you would want the audience to put into their toolbox as they drive forward in 2025?
So my background is mainly in the B2B market, business to business organizations. It's been a tough ride for a lot of B2B companies over the last couple of years, with the
Mhm.
interest rate environment and a lot of uncertainty around the election and whatever other causes might be out there. But a lot of what I've been hearing for peers in the human capital industry and other B2B markets is that it's been kind of a tough climate. And so I would really encourage, really focus on that prioritization stuff that I was talking about. Like get really, really focused on, where are you going to drive success in terms of your target customers. That's probably the most important outcome because everything else falls into place after that. And if you can get high propensity buyers in front of your, go to market teams, then your chances of success are going to be much, much higher. And
Wow,
that's really
that's
what
what we want.
Sigma is all about: is how do you get better predictability into your success?
As I always say, the data says that most small businesses don't make it to their fifth year. What we're trying to do is make sure that businesses have that higher probability to not only make it to that fifth year, but that fifth year and beyond. You mentioned one thing is cash flow, right? And at another BNI chapter, there's a gentleman who helps other small businesses. The owner is saying, "Well, I've made so much money, but I don't see it."
Yeah,
Right?
yeah.
The revenue is disappearing, I guess, because there are expenses and things of that sort. Uh, if you run into that virtual business owner who says to you, "Hey, John, I'm making so much money. I see the ACHs into my account, but at the end of the day, there's no money in the bank account." How would you advise that person?
Well, I think you need to diagnose what the issue is. So I know you're talking about, and we were having this conversation the other day. A lot of cash flow problems comes down to problems with your accounts receivable. So if you're not managing your accounts receivable well, then you're going to have inconsistency into when the payments are going to be coming through and may not line up with your expense lines. So I mean that's one typical root cause around a cash flow problem is your
Mhm.
receivables are out there, and if you let it go too long, you might have to write it off as bad debt. Nobody wants to do that, but that's also part of the reality of business.
Well, I say if cash flow is king, credit is queen. Is what I like to say because there are going to be times within your business where that cash flow is coming in and it's nice and there, etc. But also some of the things that I talk to with small business owners is that when they start their business up, they need to start focusing on their business credit profile because that's going to help them to access those lines of credit, those loans in times of low. right?
Yep.
Because you don't really want to be trying to run your business, but at the same time, you're worried, is that check going to bounce? Am I going to get another non-sufficient funds,
Yep.
etc.? That should not happen,
Right.
right? And if you are a proper steward to the growth of your organization, that will not happen because you're taking the proactive steps to make sure that that doesn't become a problem.
Yeah, yeah, that's a really good topic. I grew up in the staffing industry, which is very, very reliant on lines of credit. And I've
Hmm.
seen staffing companies go to business overnight because of credit condition problems. And you have the word network up on your board there. One of the network effects that I saw when I was implementing a particular program around workforce management solutions was one of the suppliers that we had. They had probably 40 or 50 contractors at this client. They called us up 2 weeks before we were going live with the program and said, we are going out of business. Can you
Mm,
transition our workers so that they can have some stability? And the reason why they went out of business was because General Motors declared bankruptcy, and
mm,
the bank recognized that this particular company had a potential exposure there, and then shrunk their line of credit, and they couldn't make payroll. So that was a real problem. So yeah, I think one of the pieces of advice for small business owners is that as you grow credit is really important in terms of stability around cash flow.
mhm,
In the staffing industry, you've got a disconnect between the timing of when the invoice is coming from your client and when you need to pay workers, right? You're
mhm,
obliged to pay workers within a certain time frame. Very often, that's much shorter than when your invoices are going to be paid, right? So you might be on 60-day payment terms, but you got to pay that worker the following week.
yep,
So you've got almost 2 months of float that you've got to manage, and that's generally going to be relying on a line of credit. So maintaining good credit capabilities is really important. But as you grow, you have to meet certain covenants with the bank, and so those covenants are really important to maintain, and that's going to rely on things like your quality of earnings and a number of other factors that they're going to be requiring you to sign up for. So it's a complex topic, and you should definitely get expert advice on it. But as you grow your business, that becomes more and more of a consideration as opposed to just getting like a small business loan to get started.
and John, you and I, we can probably go through a whole pot full of coffee having these conversations, right? Because that would lead into, and I'm going to ask you to come back so that we could discuss maybe, oh, well, also customer diversity, because that one customer had a whale.
Yeah,
General Motors is a whale, probably bringing in a significant portion of that accounts receivable. That one whale goes down, your ship cascades with that, and it goes down at the same time. So, if you could, we'll sort out the particulars on how we can make that happen. But I want you to share with the audience on how it is that they would be able to get in contact with you.
we have a website, www.growsigma.com, and there is a contact form on there. I'm also available on LinkedIn, and I'm sure that we'll be posting my email address here as well. So any of those methods would work perfectly well.
All right. So that's www.growsigma.com.
Yep.
And let me just quickly go over here and get up your LinkedIn just the same so that I could put that into the chat, which is then going to go to all of the other platforms,
Yep.
and they'll
And
be able to find you just the same. Any closing remarks that you would have for the audience as well, John?
Um, well, I mean, just one. If you're listening to this and you're a small business owner, congratulations. You've made an important step. I think I read a book recently, and I think over 70% of the Americans want to be a self-employed person, but a very small slice of them actually do it. And one of the things that holds them back is their own emotional context. And so if you've made that journey to make that jump, congratulations to you. That's you're ahead of the pack.
No, it's a it's a brave world to really be in a situation where you want to follow your dreams. As we talked at the top of the call, one of the things is when you start a small business, you're the CEO, you're responsible for marketing, you're responsible for sales. In certain instances, you're responsible for delivery and everything. So you may have said, well, I want to leave my corporate career, my 9 to 5, to go and do that, but it's not going to be a situation where you're not working 40 hours. You're probably going to work 60, but at least you could have that feeling of maybe I am growing and creating generational wealth at the same time.
Yes, yes.
So, John, we got all of your information there. On behalf of the audience, whether they're here or not, this is going to be evergreen and we'll play it. We had a little bit of technical issues getting it over into YouTube, but I will definitely wrap it up. On behalf of myself and my audience, I want to thank you for your time and wish you all the best and nothing but success as we move further and forward into 2025.
Thank you.
All right. Well, everyone, I hope you were able to enjoy the conversation with John. As I mentioned, John can go many places and he can go pretty deep. I love having conversations with him. Next time when we have him on, we'll probably have a conversation with John about some of the things that he does from a stock investing perspective. He went so deep the last time that I had to say, "Hey, I need a life preserver," because John went pretty deep. So we wanted to wrap it up. I'm Lee. I'm Lee Johnson with Value Investment Partners. Trying to help all of those small business owners, entrepreneurs out there make it to that 5th year milestone and do all that they can. So until we speak next week, same time, same place. You take care of yourself, you stay warm, and we'll see you soon. Bye for now.